How are you guys? Welcome back to my YouTube channel. This is the Diet Trades, and today we are going to learn about how trade is your best friend, because most traders don't lose because the market is against them. It's because they don't follow the trend. So I will tell you what the trend is and how to trade it confidently. Okay. So example here we have in uptrend. When the market is moving on uptrend, we should not look for any shorts, but instead we should look for continuation of sales. So now let me teach you. So before we start, make sure first you subscribe and let's continue. So we're going to learn why trend is your friend in forex trading. Why trend is your best friend in forex trading. So first, what is a trend? A trend in forex refers to when the market moves higher or lower within a specific period of time. A trend generally usually classes either an uptrend or downtrend. Uptrend indicates buyers have more influence over the market, and downtrend indicates sellers have more influence over the market. So I love trading gold so much. So this year is a 5 minutes time frame, and we are on uptrend, which means that buyers are in control of the market. And this year is a trend line. Yes, now you can see that there was from here to here there was a small sell, then buyers came into the market to go up, drop down, and it didn't grab this low, and it continued to grab this high, then sometimes down, up, down, up, then down, then continue to go up. This is called an uptrend. If you see a market going down like this, know that you are on a good downtrend. So number one reason why trend is your best friend. Trends have persistent momentum that lasts longer than expected. Example, when the market starts on an uptrend, getting higher highs and higher lows, it will be a persistent one, a long-term trend. Okay, guys? And if it starts on a downtrend move, it will also be a consistent one. Okay? Price getting lower highs and lower lows. So financial market, including forex pairs, exhibit momentum. Once a direction gets going up or down, it tends to continue for longer than random chance would suggest. Studies and backtests, including academic research on trend following going back to 80, show positive returns from following trends across multiple decades. In forex, if you follow the trend, it is likely that you will be a profitable trader more than just counter trending. Okay. The second one, institutions, they follow the trend. Big money pushes direction. You follow them and you cannot fight against them. That's where institution comes in. Institutions move the market. Big banks and institutions control most of the forex volume. When they build positions, price tends to trend more strongly, and the trend seems to last longer than expected. If you trade against them, you're basically going to lose money because they have deeper pockets. Example, this is how institutions move the market. Let's say you are on a consolidation phase. Price was consolidating, meaning moving up and down, up and down. What you don't know is the institution, they are building the momentum around here. They are building the momentum around here. They are putting their money around here. That's why the market is ranging. So if they want to buy, they have the position around here. So if they buy, price will start to trend, and it will tend to rise more higher and higher. And you cannot trade against them. If you trade against them, let's say you are waiting for the price to reach here and sell, you will lose money. So it's good to trade with the trend, because trend is your best friend. So the third one, when market is trending, momentum is already established. So chances are that trading with the trend dramatically increases your probability of success. It increases your win rate. Okay. So going with the dominant direction is like swimming downstream. The market momentums help carry your trade. Counter trend, counter trading. Counter trading means you are trading against the trend. Let's say the market is on a buy and you are trying to sell. In everything you are trying to sell, that means your win probability will be low. But when the market is on an uptrend and you try to maybe buy after price retracement, maybe on a Fibonacci level 50%, go into profit. Okay. Fighting the trend, e.g. counter trending, buying a strong downtrend and hoping for a reversal is like swimming upstream. Possible, but much harder and riskier. Historical analysis show that trends account for disproportionate amount of big moves. Roughly 80% of significant price action often happens in just 20% of the time during strong trending periods. Okay, the fourth one, easier trade management. They say you just wait for pullbacks instead of guessing reversals. You can say when you trade against the trend, you're trying to catch a falling knife. Imagine catching a falling knife. That's the effect of counter trading. So trending market gives clear entry zones, pullbacks by the use of Fibonacci retracement, or if you see as media support or resistance zone, logical stop loss placement, placing your stop loss below the lows or above the highs. Better risk to reward setups because you target the last high. Example, in an uptrend, you can wait for pullback to support, enter buy, place stop loss below previous low, then target next high. It is simple, structured, and repeatable. Let me show you on a chart. So here is a chart of SHA USD gold. So the market is on a uptrend. So let us look how we can manage opportunity here. I like using Fibonacci retracement. I have a lesson about Fibonacci retracement this year, and I'm going to release another topic about double Fibonacci retracement, which I've seen it working. So here, let's start with the around here. So I take my Fibonacci retracement after seeing price starting to retrace. I draw it from low to high, and I want to target 0.618 SFTT perfect zone. Let me mark it there. So you can see price has come to this level. So here you take your long position from here. You target 1 is to this last high. Okay, make it 1 is to 2 or 1 is to 3. And that's how you trade the trend. So the fifth one on why trend is your best friend is that it reduces psychological and practical edge. Trend reduce emotional decision making. Like maybe when you're angry, maybe you don't know what to do, maybe if you're stressed, we just wait for the market to start trending. Instead of constantly predicting tops and bottoms, which is very hard, especially in gold, due to noise, you react to what market is actually doing. Because many professional forex traders build the entire edge around trend plus confluence. E.g., we have uptrend, maybe support and resistance. Example, maybe you have uptrend, this is uptrend, then we have support around here. You can wait the market to come around here, then you buy. Sometimes by the use of Fibonacci retracement, maybe you take your Fibonacci from this low to this high and wait for 50% retracement, 50 work, also 0.6 work, and also 0.725 work. But 0.7 works only if it is in align with support and resistance. So guys, I have shown you how to trade the uptrend, and the downtrend you can do the opposite. And if you want to learn more of this strategy, make sure you subscribe, and I'll be posting videos consistently.